welcome to daily market analysis. This is for November 7th, Wednesday, tomorrow, 2024. So let's look at the charts. And then there's a Nifty 50 charts that you see here, an eventful day when the US presidential election outcomes came in and market reacted positively. In fact, the reaction started a day earlier, and that's around 3% of recovery after a 9.25 or 3% of correction that has happened through the entire October month. And probably it could be a reversal after a 1 month long correction. But the bias is still bearish if you look at the Bollinger Bands, although the expansion is slowly turning into contraction on the downside. So, but it has still not climbed above the median of the Bollinger Bands. Now in Banknifty, it had done a remarkable recovery yesterday. Beautiful bullish engulfing pattern candlestick can be seen here on yesterday. Very big candle, and that was followed up by a small body but a positive close candle, but it was more or less than 0.5% of more that Banknifty could make. Banknifty remained more or less very small, tight range bound, flattish. It's only 171 points that Banknifty has. So Banknifty has got one more event to deal with by tomorrow. Day after tomorrow, probably it may react to that. Tomorrow we have the Fed rate decisions also coming, I guess. So overall, if you see the entire October month, Banknifty was trying to consolidate and not fall down, just not giving up the momentum to the bear zones after the October 7th fall, when it made a low with around 8.5% of correction. In fact, it was Nifty that corrected more this time for a change. But Banknifty was the entire October month, it was trying to recover or trying to consolidate more or less. So it was Banknifty that held the Nifty from falling very bad. Right, that's the difference that you can see. But today's candlestick was more of a consolidation, or a wait and watch for the next event to come through, outcome to come through. That's what I would guess. And there is bias as per the Bollinger Band is bullish, because it's above the median of the Bollinger Bands, as well as there is an expansion on the upside can also be seen. So that way Banknifty is still much more stronger than Nifty. All the today's move is less, but there is a consolidation zone. There is a big resistance zone that's coming right ahead, and after that immediately you have the previous window gap resistance also coming in before it faces the 52,000 and the 52,350 neckline of that rounding. So looks like there is a cup and handle breakout that may be happening. If it happens, it can be really big, as much as the height of 3,000, 4,000 points. Yeah, if it happens, you never know what happens. But yeah, it's bullish biased Banknifty with a flattish close today after yesterday's big bond banks. But Nifty recovered 3% and with a solid bullish. Intraday, if you see, it was trending from beginning itself on the Nifty, but Banknifty was flattish the entire day, doing nothing much. Very small, tight range. Right. So that's what the day was. That's what candlesticks and patterns. Now, if you look at the momentum, Nifty had a divergence which was bullish in nature, and it worked out with respect to RSI momentum bullish divergence. Trend is still not crossed over. It remains to be negative, but the strength of the bearishness is reduced, you can say. Banknifty, the trend still has not crossed over and remain in the negative zones. The momentum has improved, but it was in the sideways. So the positive thing that has happened today is that both indices are now in sideways momentum as with respect to the RSI. Although the trend is set to change. Keep that in mind, the trend is set to change. Obviously for the Nifty also you have the moving average resistance that is there, 20 and 50 right there at 25,000 nearby. So moving above the 25,000 would be the big task in front. So similarly Banknifty also has got a lot of resistances out there before it can really say breakout. So it's still not there, but Banknifty is taking one step ahead, and today's move was very positive for the bulls. But what the question is, will we be able to take out at 25,000? Let's look at the resistance support levels for the Nifty and the Banknifty to begin with. Nifty. So first immediate resistance would be the moving averages at 25,550 is the 20 exponential moving average, and right above that you have 25,567. So 25,600 is closing above that is very crucial, because that is where the moving average confluence resistance are there of 28.15. First hurdle. Second, you have the so first hurdle is the 20 exponential moving average is coming at the 24,600. Then the 50 is coming at 24,780. So then you have the 25,000 big rounding number, and then 25 big rounding number, as well as it's a resistance zone. Then you have 25,227, then 25,470. So our previous resistance zones that could act as resistances on the journey upward. Downside, the previous string lows at 23,816 that was made the other day would be the first major support. It's also Fibonacci 50 from where it bounced up, so that's going to be the crucial support. If 23,816 is breached, it goes down to the 200 exponential moving average that comes in at 23,433 as of now. Then the right below you have the 23,200 where there is a previous resistance and the Fibonacci 61 supports are there. Right, and 22,700 is the next previous resistance zone could act as support. For Banknifty, the levels on the upside resistances would be the 52,800 at 17, where gap resistance is there. Above that you have 53,000 rounding number, and then 53,360 is called the neckline of the rounding pattern. Then another gap comes in at 53,763. Also resistance before it goes to the 8 all-time highs at 54,000 and 54,465. Downside, the first support would come in at the previous June lows, which is unbreached after it was touched. It was made in the October 7th, and that comes in at 50,200 nearby zones. That's also a Fibonacci 50, and 49,650 is the previous June lows, and the 200 exponential moving average. If that is broken, then the next stop would be 49,000 and then 49,600. That zones where the previous resistances appear. So that's the support resistance for the Banknifty and the Nifty. Now momentum trend, we already seen momentum did improve. Both of the momentums are in the sideways trend, is not recovered and crossed over yet. Still in the bear zones, and volatile India weeks has cooled off now that one of the event is over, but can once again spike up when the next event comes in. So that may happen tomorrow actually, but today it cooled off after the event was over, and it is falling to 14 points and 14.5. So that's still in the still not fallen to the low volatility regime, so still there. Support resistances we have seen. So tomorrow we have the weekly expiry. Let's look at the levels for the Banknifty. Levels for the Nifty, if you have, so it's for the numbers and tomorrow's expiry. This here is still bearish, 0.85, but closer to the bull, not that much bearish, very close to the one put call ratios. So options, that's for the options, and for the build up on the futures open interest, it's obviously it is a long build up today, right? So the levels, if you look tomorrow, the major first resistance to be taken out is 24,500. Then next resistance is 25,000. So a lot of things can happen here. Supports are there. Very good support is seen at 24,000, and then if that is breached only, then it can go to 23,500 and 23,000. But it's on the journey upward, so it may face some resistance to take out at 25,500, and if that is taken out, then market would go up. You'll have know where it stops. So that's the open interest for the next day. And for institutions for selling for last entire October month, 1 lakh crores, and there's no difference yesterday also, but today that has not coming out. I don't know whether So sorry about that. But yeah, so we don't know whether they solved it today or they changed their stance after the election outcomes. We don't know that. We'll have to wait for some more time. US markets are solid green. Of course, the futures responded well. Futures of Dow Jones and has a beautiful wide range bullish candle and Dow Jones, Nasdaq, S&P 500 all are ready to make the all-time high once again following the election outcomes, because Trump is good for business is what the general assumption is good for the US business. I'm not sure if it is good for our country's economy and business, but for business generally, US business, it is because he's a tariff man, and so it may work out well. Is why the market is rising up, and there is a Fed event also anticipating more cuts. So obviously, market is happy, and the US and the global markets are also following what the US market is doing. So that's what you see. The gold is lost its sheen, and it has taken when the currency of US dollar has strengthened. Obviously, gold has corrected around 3%. So you see some bearish candle on the gold, but the momentum is no longer bullish and slipped to the sideways. So it could further go down to a good extent now that the event is over and gold has strengthened. So what has happened bad is for the USD INR. So rupee has depreciated further after the dollar had strengthened. Right? Dollar is showing a big dollar index is showing a big wide range candle, and so is USD INR currently pair, and rupee has become much more weaker, which is not that great news. So it indicates that that's not that great for our Indian economy, because as a tariff man, Trump may cause trouble for the growth of the emerging markets as such. So, but considering the Modi-Trump relationships, Indian market is also probably going up, and also foreign institutions might have bought today, or more foreign money may come in when Chinese money is taken out when Trump puts tariff on China. That's one thing. And then oil is dipped, still above the 70. Seems like there may be some ease in the Middle East crisis. So the global order is going to change after the new president has come. So a lot of things may change, and especially with respect to Ukraine and China and all those, right? So the market may be digesting some of those news and then moving accordingly is what we'll have to assume. To sum it up, the market has recovered on Trump for the last 2 days. Banking index had done it yesterday itself, and then today it's stayed flat, anticipating the next day event of the Fed. That's what has happened, and that's market view overall. Although the trend has not changed, market has picked up, and it could be a potential reversal, but it's no confirmation yet. But banks have been holding the market strong for the entire 1 month. Market is slowly trying to shift from consolidation to a bias or a bullish expansion on the upside. That's what we'll understand. So that's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.